be wealth management, tax planning, estate planning, Marcus Warren is the answer at Warren Wealth Management. He joins me once again. And today's theme, we're going to talk a little bit about inflation and these hidden termites when it comes to your retirement. Yeah, I think termites is actually a good, it's a good word to use because you don't see them, but they're eating away at something.
Bite, they are eating away at your retirement house, if you will. So yeah, and you know, when you think about it, inflation, you know, people really just generally don't think about inflation, especially, you know, lately because inflation has been relatively low. And historically, inflation's average about 3.5%. But last year and going into this year, it's pretty much double that. It's 6 to 7%, and that's for a number of different reasons. You know, obviously the first being just the supply chain issues, fewer things on the shelves, that creates natural demand, and of course you see prices go up from there. And then of course all the money that has flooded into the system with stimulus, things of that nature, and there's been this massive amounts of spending which have pushed, you know, home prices up, lumber, used cars. I have a friend who sold his used car for more than what he paid for it, and that never happens simply because it's a depreciating asset.
Sure.
But that's just the environment that we're in today, and it can actually hurt retirement income.
So you just mentioned a couple of things that are kind of unprecedented, like the supply chain, your friend selling a used car for more than it was worth when it was new.
Yep.
Those kind of things are unprecedented. So when we see these kind of inflation and these kind of things happen, this kind of inflation, should we be worried, Marcus, or do you think this is temporary, or is this the start of this negative snowball that's going to continue?
I think that it's somewhere in the middle. You know, this inflation right now is relatively high. Like I said, it's normally average about 3.5% or so. But over a course of a retirement, you have to be aware of these things. So we'll say retirement lasts about 20 or so years. If you go back to the year 2000, about 22 years ago, you know, the cost of a stamp was 33 cents. Mm-hmm. Now it's 58. A gallon of milk was $1.99. Now it's $3.80. A gallon of gas was $1.50. Now it's $3. So if we continue on that pace, you can expect during the course of your retirement for most things to double, right? And so I would argue that inflation is worse than a market drop. Why? Because when the market drops, as long as you don't panic and sell a lot of your investments during that time, generally the market will come back. Mm-hmm. Conversely, inflation prices go up on things that you need to buy, you know, food, gas, you know, things of that nature. And if it continues down this course, you can find yourself with less retirement income, so you have to be aware of it.
So with that being said, what kind of advice at Warren Wealth Management do you give your clients? I mean, is it like, okay, you thought you were prepared for retirement, and yes, you've got a nice little nest egg,
right? Add
another 10, 20% onto that as we move on down the road, or how do you work that, Marcus?
Well, one of the things that we do is we want to make sure that we factor in inflation into in their full retirement plan. And so, you know, a lot of people don't do that, but we want to make sure that, hey, if we can project out 3.5% inflation, we're always going to look at shooting for good rates of return that will take that into account. And so if we're looking at 4 or 5 or 6% rate of return, that is generally after inflation. And so you have to make sure that that's written into your retirement plan, because like I said, inflation, they are those termites that will continue to eat away, and you'll have less money down the line.
So for some of those who are close to retirement age, or maybe at retirement age right now, and they're going, okay, I did not account for that, or another little variable that we talk about a lot is taxes. Yes. And how they will go up as well. Yes. So let's say it's someone who's going, oh, I'm looking at today's, you know, economy. Can they make up for that? Is it a side hustle? Is there something they can do that Warren Wealth Management can help them with to kind of put a Band-Aid on this, or I don't want to say that, fix it, for lack of a better term?
Yeah, so you mentioned taxes, which, you know, inflation and taxes. Taxes are inflation's evil twin, right? And so what can you do? What you have to do is, one is you always have to have just a plan, right? But the way you combat inflation is you have to have growth investments. meaning that you have to have money that is going to grow at least at the rate of inflation or beat inflation. Because a lot of retirees and people who retire, the general rule of thumb is once you retire to really start putting most of your money in fixed income investments, bonds, CDs, things of that nature. But with interest rates so low, you're basically losing money each and every year, because if inflation is at 6% and your bond is giving you 2 to 3%, you're in essence losing money each and every year. And so you have to make sure that you have growth investments, things that are going to keep up with inflation and beat inflation. So as long as you have that coupled with, of course, you need those foundational assets, then you should be fine. And then, of course, the tax part of it, which we know that tax rates, these current low tax rates that we have right now, we know that those are expiring at the end of 2025, and so you can see, if we continue down this road, you can see, one, inflation continue to snowball, as you said earlier, but then two, when taxes go up, retirees can find themselves in a precarious situation.
At Warren Wealth Management, you have strategies to help people. And I think what's interesting is there are a lot of folks, because money is so personal, I think that's one of the reasons why people tend to say, I am a do-it-yourselfer when it comes to my finances, because money is personal. But, you know, I read that Warren Buffett and these multi-billionaires have financial advisors, and they realize that, you know, even if you think you know it all, you don't know it all. So for someone who's out there and going, you know, I think I've got myself covered here, what advice would you give them? Because I read this all the time. It's like, don't think that you know it all when it comes to your money.
I would say don't be incompetent, incognizant, meaning that you don't even know that you don't know. And what you see is you see a lot of do-it-yourselfers that are, they really don't know that they don't know. And so they think they have it all under control. One is because we're in this environment where you have the commercials, you have the media basically saying, hey, you can do it on your own. We're going to give you all these tools, these charts, these graphs, things of that nature. But it's like, wait a minute, this isn't your profession. So if you're a teacher, yeah, you may be able to look at charts and graphs, but do you really have the time to do that, and can you invest that time, you know, to make sure that you're on the right path? You can't do these things, you know, an hour a week and think that you're always going to be ahead of the game. A lot of people think they can, and a matter of fact, the market has contributed to people thinking that they're investment geniuses, because the market has gone up for the last 12 years. Everybody thinks it's because of them, and it's not. A rising tide lifts all boats. We're starting to see it this year. Now the tide's coming in, and a lot of people have been caught swimming naked.
There are so many advantages to Warren Wealth Management. He has all the technology. You can hear that he has the passion as well. Marcus, for those who would like to have a quick conversation with you and say, okay, is this a good fit for us? Because I know sometimes it's got to be a good fit for you too.
Yes.
So they, you know, give them a call. I know you have plenty of business out there, but you take pride in being personalized. This is not cookie cutter. This is let me sit down with each individual, right?
Right, and that's why we always start with a 15-minute phone call. We want that introductory call. You can find out a little bit more about us. We can ask questions to you, find out more about you and your plans for retirement. And if we're in alignment, then we try to schedule that next meeting where we do try to build a personalized plan that is unique to their needs. Speaking of inflation, everyone has their own inflation rate. So it depends on what you're spending money on. I said it averages 3.5%, but for someone else who may have more health care issues, things of that nature, it's probably double, maybe triple than that, because health care costs shoot up higher than inflation, prescription drugs, and so everyone has their own inflation number. And so that's why it's smart to sit down with somebody, map out a plan for taxes, inflation, investments, and we do that all, and we do it all.
Marcus, I get emails all the time, and they want me to ask you certain questions. For folks who'd like to hear more from you, more of your expertise, tell them where they can find your podcast.
Oh, anywhere you get your podcast, Apple Podcasts, Spotify, all of those platforms. We have a lot of good information. We answer a lot of emails and voicemail calls that we get, and so it's a lot of good information for people who are in retirement and almost retired. So yeah.
That's right. And he also knows football, folks. Okay, your prediction. Who do you like, Bengals or Rams?
I like the underdog. I'm going with the Bengals.
Okay, there we go. Who day?
Joe Burrow. That's
Joe
right.
Burrow. He is the difference. Okay. Take a little break here, and then coming up, I'm going to introduce you to Tim Nash, who's not only a nice guy, he's a good-looking individual thanks to Freedom Mini Dental Implants. Tim and Dr. Reagan